Well, it was fun while it lasted. What a fucking day. Welcome back to Money Never Sleeps, ladies and gentlemen. Before we get going, do us a favor, hit that like button, subscribe to the channel. Nothing that Kevin or I say is financial advice. Do your own research, yada, yada, yada. Kevin, we saw Bitcoin touch over 69K today, and then it got bitch slapped back on down. We saw it as low as 59. What I'm seeing on the charts here, 59.1. Was the lowest it got, 59 like 240, back to 62K just about. Ridiculous day. That the resistance was very, very strong. I knew I had a bad feeling when I saw people last night being like, we've never gone to this level, there's no resistance above 69K, and I was like, oh boy, that's quite the claim, and I'm not feeling too great about that right now. What whew. I mean, that's some red. That's a bearish engulfing candle on the daily.
Oh, yes,
the hourlies look like shit. Wild times here. Who knows where we go from this point? Probably back down. I'm not trying to figure it out. How are you doing today, buddy?
Doing great, man. That intro hit especially well today, given what's going on in the markets. We'll say that. Just want to pull this up. It's a tweet I sent out last night, and I'm not gloating one bit, but I said I think we'll see all-time highs because it was literally 500 fucking tethers away, which we did see all-time highs on some exchanges. I will say that some exchanges. So some of our Elliott wave theory still valid. Binance hit 69 to the penny, same as it did back in November of 2021. But I said, how funny would it be if it was just a massive dump down to 52K? We're on our way, guys. Here's the thing. I was being a little cheeky bastard last night. I wasn't being a whole lot serious, but that is a level of support. So we're gonna keep an eye on that, see how things develop. I'm not gonna try and time the top because I told you guys that this week is not the week to be playing around with price action or worrying about all that stuff. The debt market is where you want to keep your eyes on this week. Clearly, a lot of the influencers have not been paying attention to the debt market. They haven't seen that this is 100% a manipulated move up to this level. Got rejected right there. Huge sell wall, and we also warned tons of bad funding rates aren't going to make for this run to have any type of longevity. This is a very, very quick push it in before the bank term funding program ends, fucking rally, and then good luck, guys.
Oh baby. I'm just gonna keep listening to you on this stuff, Kevin. Here's the thing. Kevin gets some shit sometimes. Some of it's from me. When it's coming from me, it's always coming from a place of joking. Kevin has saved my bacon over the last couple of years on multiple occasions. So, I tell you to do your own research. Oftentimes, that guy over there is my research. So, yeah, I appreciate the fact that you have remained steadfast in this and had that conviction and been keeping your eye where it really matters. So, let's just keep...
It takes balls of fucking steel, because I could have been dead wrong.
Huevos, buddy. All right. Let's keep it moving. We got J-Pow speaking tomorrow and Thursday on the Hill. Interested to see what direction that takes around inflation, interest rates. We're going to be talking. I'm going to cue you up on Japan here in a second, because I know you want to talk about their economy and the inflation report that came in out east. So why don't we head on over to the other side of the world and talk some Japan?
Absolutely. Let me just pull up some of the indexes. Let's pull up the Nikkei. Okay. That's the one that we showed yesterday on the charts. Obviously, it's above 40K. Last time it's never been in this territory. Like they said, there's no resistance beyond 39K. For 40K, it's pretty much what it would be for Japan. The last time they were here was 1989, and they're a little bit north of that. You can see that we are down 11 on the day yesterday. Now, is that anything that we should be worried about? No, but we could also see that it was a lot higher. It was a lot higher earlier in the day, and it kind of pushed up, and then it got rejected, and we see that it closed up a little bit here. So it was a very volatile night. or I guess day in Japan yesterday. We're going to see how that plays out today. But their Tokyo CPI numbers came out and it was hotter than they expected, right? And
That's an understatement. It was significantly hotter than they anticipated. It was the expectation was like what 1.6 and it came in at 2.6. That ain't nothing.
I will say this though, they're in a very difficult place because the price of goods might be coming down. I think that people aren't necessarily making as much. I think deflation is their problem. However, the CPI is heavily manipulated right now by energy prices, and obviously they're a huge importer of energy. I wouldn't be surprised if that number reverses in the months to come. And I think that's just because global demand is really a big issue right now. But oil is just being so fucking tricky. And we see that these oil cuts are kind of a ploy to get, and I mean that in like, we want to make more money type of way. That they're going to try and do what they can with the oil market in order to make as much money as possible because demand is coming down. So what are they going to do? They're going to cut supply. And the more they do that, obviously they have all the justification to keep the prices elevated for the time being. Now, this is going to start to become an issue in the summer when there's no fucking demand. What are they going to do? Keep cutting? At some point, people are just going to be in a place where, if unemployment continues to rise, a lot of the oil industry is going to start to see a lot of pain. And when oil comes down, it comes down fast. And we're talking about a full-on recession, right? So I think that Japan is in a really tricky place because a lot of the energy is the reason for their CPI. We also know that their wages are pretty stagnant. It's getting to a point where it's really hard for their economy, a lot of their citizens to kind of survive in modern day Japan. The other thing is that's really tricky about it is the currency. The yuan is, I keep saying the yuan, the yen. It's too many currencies with Y's in their names. The yen, Japanese yen, is losing value to the dollar. It's up a little bit today because obviously gold has taken away some of the heat from the dollar, but you can see that we're no different than where we were back in November before we saw the rally. So we're in kind of that dangerous place where the markets are down, dollar's getting stronger, the yen is losing value to here. Now the question is what happens if they raise rates, which it's likely they're going to do later this month. There's a good chance that their equity market could absolutely tank. The last time that they raised rates was literally in 1989 when the markets were up this high, and it tanked it. If we look back, it's the Nikkei from 1989. The reason I'm so I think history is really important when we look at this is because if we look at this on the monthly in history, how fast this went down once they started raising rates, right? First month, it was down 4%. Following month was down 7%. Month after that, 13%. To the point where it finally found the 50 moving average because it was so inflated, so high above that 50 moving average for a period of time on the monthly. It was down 29% in the course of 4 months. So 30% moved to the downside in a matter of 4 months. That's the dangerous thing about, being so away from this, not being able to find support. And once it did break through supports, it came back, bounced off it, and then it broke through support again. Well, then you're going to test the 200, and it finally found it down here in 1992. But by the time that we got to the bottom of that, we were roughly 63%, 64% down from the all-time high. So it's a very dangerous thing that we're seeing here. And we see that it took literally 35 years for them to finally get back to where these levels were. That's why it's dangerous buying at the top. You don't want to see that. Now, if we move over to China, we see that they're having some problems too. We're starting to see a bit of a reversal in some of the major indexes. We're seeing the Hang Seng also pull back here too. So pulling this up, can see that it was in this rising wedge. Well, we got a close below the 50 moving average and a close outside of the wedge, and we still have some room to the downside. It looks like on the daily stochastic RSI. I'm looking at the 15,200 level. I think that's going to be an interesting level to see if it holds. Could it go down further? Absolutely. I think the important thing to see here is this white trend line here, and I could make this let's make this a different color so we can keep an eye on it, make it yellow, make it dotted, dashed, whatever. We lose that level, then we're probably going to be seeing, new lows, which will probably be at this green level down here. Just from where we currently are, if this doesn't turn around and everything kind of sinks together, which we are kind of making the case that we're in a globally synchronized economy that is going to probably see debt all come due at the same time. It's another 33, 34% that is possible in China, right? They haven't been printing stimulus. It hasn't been rebounding the markets to the levels that they want. At the end of the day, it really does come down to supply and demand. We're not seeing that. We're also seeing unemployment continue to be an issue globally. It doesn't help them one bit because now there's less people to need goods for them to manufacture. And then obviously with oil being really expensive, it doesn't make sense for them to keep a lot of people staffed because, production costs and everything are just going to be a lot more. So we're in a really tricky place. And we see Asia kind of seeing this more so in the front, I guess, the public eye, as opposed to what we're seeing here in the US. I think the US is very much a lag right now, but I do think that things are starting to turn. And I think the labor market, unfortunately, is the last thing to kind of hint at that. Right now, all we have is manufacturing and also a lot of the debt that's coming due with the banking system, and also, credit cards and a lot of delinquencies, a lot of bankruptcies too. Bowflex out of business. They're gone.
Oh.
Sorry. No more commercials from the 90s, 2000s of Bowflex. Days are gone.
Terrible. Okay. So, we got the update on Bowflex. Thank Christ for that. Markets are, cryptos, we're getting a little bounce here, but let's talk TradFi for a second. Pretty bloody day over in those streets. NASDAQ down just under 400 points, 2.18%. And it is just red across the board, except for Walmart, which is up a little bit just on like some of the watch list I have. But we see, Coinbase, not surprisingly, down. Microsoft, Netflix, Tesla, Amazon, Apple, all getting hit hard. Nvidia is still down on the day, but just barely. So that one is continuing to fight on.
I gotta pull this one up. MicroStrategy.
Oh, baby.
Down 15% after having a fucking stellar day yesterday. Yesterday it was up 23%. Today down 15.
That's many a gap.
That's that sailor gap. All sailors are gonna go down sinking with that Bitcoin ship, it seems.
They're trying to raise another 600 million to buy more Bitcoin.
I had the article pulled up. I was just about to say, dude, they're a bit foolish if you ask me. If you want to buy at the top, be my guest. I just don't think that's sound strategy. Bull strategy, Cotton.
Oof, that is, not an ideal. I mean, he bought at the top last time. I think he bought all the way back down and back up again. So that's just who Sailor is, man. Like, the guy's in his office doing rails a blow and putting in buy orders on Bitcoin. Like, that's just a day in Sailor's life is what I'm viewing.
I don't know what that guy's up to. All I know is that he could buy all the fucking $69,000 Bitcoin he wants. I'm gladly waiting for lower lows in that FTX to 10K region right now. But I just wanted to pull up that.
You keep going. You keep going to these. You and Capo, you and crypto, it's going to 12K. I'll see you at 12K. It's not going to 12K. We can make a bet.
You're right.
On
it's going to 9,750.
It's not going. I will bet you one Bitcoin that it does not go to 9,750.
Do you think I have a Bitcoin right now? If I'm wrong, what would I give you a Bitcoin when it's at like 10,000?
Yes. Yes, you would.
I'm not making that bet because guess what? I am risk averse. I'm waiting for things to happen. I'm looking at the debt markets. That's all I'm worried about. But I think Bitcoin, and this is the thing I will say, obviously technical analysis is important. I think a lot of people like to say that, it has to be like this because XYZ, ABC, elemental P, any of that shit. Yeah, it works. It does. And it's a really good way to pair that with the fundamentals. But at some point too, you just have to understand where we're sitting, right? We're talking about unemployment that's probably going to continue rising. People are going to sell off a lot of assets. People are going to probably lose their homes. They're going to lose their jobs. We're going to start to see companies that are going out of business. They're going to file for bankruptcy. We're going to start seeing banks that are collapsing. Like we're talking about, I'm not saying the end of days, but we're talking about something that's to the likes
of. I hope you're not talking about the end of days.
2008. And I'm saying 2008 because it's something that most people fucking kind of remember. I don't think most of the people on Twitter, for the most part, were trading back in 2008. You might have been one of the only people, Jweb. But what I'm saying is,
I wasn't trading. I was just buying shit and watching it go down immediately. That was my trading. It's like, I made some money over the summer. Let me put it into stocks in the fall of 2008. Hey, wonder how that's doing. Bad.
Yeah, I mean, it's kind of where we are, and people kind of forget about how bad it really got, right? I mean, I had a different experience to it. I think a lot of people did too. Some people might have not been affected by it as much, but I do think that people underestimate the likelihood of bad things happening, and we're wishing and hoping that Bitcoin goes to all-time highs. And I'm not convinced. And when we look at the S&P and some of these other ones, I mean, look, it's down 70 today. Am I calling the top of the market? No, not one bit. I said that we had within 25 days, the top of the market will probably be put in. Right now, it looks pretty nice seeing that, but I'm not convinced just yet. We need to see some we need definitely some what is it? Not verification, not clarification. I can't think of the fucking word. We need help me out, brother. I don't know what the word is. What is it?
Confirmation.
Confirmation. I knew it, dude. I knew it started with it ended with a nation. But yeah, this is where we are. We're so, like I showed you in the Nikkei, we're so far away from the 50-day moving average. We got to see if that gets tested. I mean, if that gets tested on the Nasdaq, the S&P, S&P, do I even have it up here? Oh, S&P is down here actually. It's down at 49.08. So I mean, there's still a pretty good move. That'd be where I'd be, saying that okay, this is the top of the market. The interesting thing though is also volatility kicking back in. Looks like we're having about 9% up on the VIX today. I like to see that. I think that's going to be a huge thing over the next coming weeks too. But a lot of people are just kind of looking at the charts, they're trading the technicals and saying, "Oh no, we got another wave 5 that's going up here," and it's like, you're pushing your fucking luck. You're one bad day away from this market deciding everyone's having a bad fucking day. That's really where we are in this market. I That's why I'm risk off right now. I don't think that it's smart to be shorting or longing. If we can go into the banks real quick,
let's do it.
Oddly, the banks are fucking up today. They're not effing up, like messing up, but they're messed up, but they're not doing bad today. They're up 0.46, 0.21, 0.61. Schwab doing a little something different there. But the one that's kicking ass today, New York Community Bank, up 16.67%. Yeah. So the reason I wanted to bring up this again is because someone brought up a really good, interesting idea on Twitter last night. I'm like, that's really interesting what they were thinking. Now, this is probably a bank that should be in receivership already. It probably should be at the point where, this is going bust and people are picking it apart for its assets. However, it's not happening yet, likely because the bank term funding program, obviously the reverse repo, but no one's came forward to kind of save it, right? Not like in the Bear Stearns type of way. And we haven't seen the collapse yet, but it's getting to the point where we should be concerned about New York Community Bank. Now, the reason they think that there might not be anyone to come and buy this is because all the other banks are in a lot of trouble. And if the longer it takes for someone to buy up these assets, that means there's probably a lot more banks that are in deeper shit than we probably think. And that goes from the top down. I'm talking about JP Morgan cannot, because there's just too much. The amount of deposits that they would need, they would have to worry about, their capital requirements that they'd have to keep on hand. It makes it harder for these banks. That's literally why New York Community Bancorp is in trouble right now, because they took on some of the Silicon Valley assets and now they couldn't meet the capital requirements and it just fucked up their entire balance sheet. I mean, that's why the bank pretty much is tumbling at this point. Imagine that for smaller banks too, right? Mid-sized banks, no one wants to touch this. The bigger banks don't want to touch this. What happens to this if it actually goes, tits up, as you would say? I don't necessarily know. There needs to be a buyer at some point. Otherwise, we're not bailing out anybody. And if it's a bank this small is the problem, imagine when it's like a Truist and I'm not saying Truist is going under, but imagine something like a Truist or a Schwab or some that were on those lists that, had FHLBs where percentage of equity were absorbent amounts similar to Silicon Valley or First Republic or Signature, or say that they had, deposits, the number of deposits over 250K is near 60 to 70% because they're a larger bank. It's all the large banks that are causing the problems. The commercial real estate's a huge different issue. That's also getting really bad too. But if there's too many problems in the banking system and debt's being called up, and we're seeing that there's a collateral shortage because we know that the U.S. Treasuries are not being bought as they would like. That's why the yields continue to go up on the longer end of the curve. There's a good chance that we see a lot of bank failures. And New York Community Bank could be signaling that. I don't necessarily know if it's really hard with the bank term funding program thinking that something new isn't going to come in. I can't imagine there being something new that comes in, because if they do allow something to come in, there's a good chance that we could be seeing hyperinflation, right? They have to save it, but by saving it, it fucks everything up. I don't think they want to hurt the US dollar. I think they would sacrifice the banks before they sacrifice the world reserve currency. That's just one thought. Now, it's really scary to think that, because that means that between now and next year, when all these loans do come due, how many banks are going to go up? That's the scary thing. No one's kind of, accounting for it right now. They're saying, oh yeah, some of the regional banks will be bad. Even Powell, he's just like, yeah, we expect some failures, but we think the banking is contained. It's strong and resilient. The White House came out last Friday and said the same exact thing. I wouldn't be so sure. I think it's better to think that, nowhere is safe right now. Obviously, I think treasuries are safe. That's because it's zero risk, but I think that's a market that is going to squeeze fairly soon if we do see some problems in the banking, which will bleed into equities because there's not as much money or leverage flowing into the system. But I do want to show this too. This is a TikTok article from Manhattan Institute. Fashion TikToker just racked up 4 million views for an explainer video how rent stabilized New York City tenant can ask the state government for a rent record and ensure it matches what the landlord is charging. So obviously rent is regulated in New York for certain apartment buildings. And the funny thing is, who's in charge of paying these back? She was paying $1,850 a month, and she was supposed to be paying $1,295. Right? Now the funny thing is, who's in charge of these chargebacks? NYCB. That's the kicker there. So now they have that problem on there. They have so many problems. Who wants to buy this? Who wants to buy this bank with all this debt? I don't know. I don't know who's going to do it. It's not going to be JP Morgan. I can guarantee you that. That's not financial advice, but that's just me saying JP Morgan wants no part of this shit. Bank of America, with all those unrealized losses, hold to maturity. Don't know if that's going to work either. We're going to run down the line until someone buys it, or it just goes. That's all I got.
I was on mute still. That's not ideal, I think. I don't understand a lot of the banking stuff, but that seems subprime.
It's subprime. It's dog shit. What was the one that you sent me yesterday about the cookie? The dude bought the cookie.
the dude who bought the cookie, who was buying like 8. This guy was pissed about inflation because he was paying $18 for a fucking cookie. I gotta share the screen real quick because this is one of the.
It's the best tweet I've seen in a while.
Oh no, I can't even see it anymore because the guy who tweeted it like limited his account because he was getting so much engagement from it.
Bastard.
He was getting like dragged on the internet, so he was not. They didn't. Maybe he deleted the tweet or he like locked his account. But basically, he was bitching about inflation because the cookie he buys went from $16.75 to $18.75, and then this dude tweeted out, "Fuck it, let's rev up inflation and see how much this dipshit will pay for a cookie."
I'm okay with that. I think we can.
I was crying.
I say fuck it, let's do it. Cut to zero right now.
Yep, cut to zero, rev that, just fire it on up, fire that inflation back up. Let's see what this guy is willing to spend on a cookie every day. Good Lord. The key to financial freedom, not spending $18 a day on cookies. That's part of it.
I think that's a bad strategy there, Cotton.
Just a little bit.
Look at this, man. We got to talk about gold real quick. Because Metal Mania.
Victory. You and your best friend, Peter Schiff, you douchebags, out there taking your victory laps together while gold is it's up $30 in 9 days. It's amazing. The best asset in the world.
Let's be honest. Gold's up $30 in like 20 years. Okay. Gold is not, it grows over time, obviously, but you can see that it's had a really good run over the past few days. Friday was up, $38, Monday morning, 31, today, 15. The thing is, we're getting close. We're extremely overbought on the daily, right? We talked about getting to an all-time high. We didn't. Obviously, this is still the all-time high back in December. I think people are front-running gold. That's just my opinion. And we could see that gold is doing really well. Oh, my goodness, yawning. And we also see that silver was doing really well, but it's getting rejected here a little bit, also getting close to overbought. It's one or the other. It either breaks up or it breaks down, obviously, right? It's not going to – it could trade sideways too, but it's going to be one way or the other for both of these.
Top-notch analysis right there, Kev. It's either going to go up or it's going to go down.
Right. But let's pull up 2008 real quick because that's just such a fun year, and we love that year on this show. You can see that back here in March of 2008, kind of hit an all-time high and then tanked for months, right? I'm not saying this is going to happen, but and again, you would need a financial crisis underneath this. You can see that we are 33% down from that high that we did get in 2008. Now let's come over here to where we are currently, and let's say that this is the height that we got back in December, 33%. That would put us roughly around, look at that, right around the 200 EMA. I'm not saying it's going to $1,400. Obviously, I'm not going to be that much of a fucking psychopath. I kind of agree with Peter Schiff in some aspects of how gold's going to be useful in the coming months. I just don't necessarily agree that it's the move right now. I could be dead wrong, right? The dollar could, Jerome Powell could absolutely fumble this bag. Third crisis, and it's like, we're just going to cut rates and we're going to let inflation run. Dollar goes to zero, gold goes up. It's going to be interesting to see what happens there. Or gold would go down actually. But I'm thinking here, what we're looking at this is that we do have a bit of a pullback coming soon on the monthly. It's too overbought. I think we are going to probably see, man, I hate to say this. I think we're going to see a financial crisis. Again, me just following the debt markets. I don't know when. I'm not going to time that shit. All I know is that things are lining up to that seem like we should see one. If I'm going to look at the dollar too, dollar is extremely strong right here. We can see that it's so oversold on the daily. On the monthly, actually. If we go into the weekly, we are overbought completely. So that's really interesting to see how that is. But if we go into the daily, smaller time frames, look into the dollar, you can see that it's coming down. It's an ABC correction. I'm still charting. And again, we're seeing that pullback right when we're about to get that golden cross right here. It's no different than when we see a rally right before we get a death cross. I think that this is going to play out for a few days. Then we'll take a look at see how this is maybe come March. But I do think we're probably going to see a bit of a bounce coming here for the dollar. And, between that and the metal mania that we're seeing with, precious metals, I think people are just front running things that they know are coming. I think that I said the dollar with the TH, the dollar, and I sound like I was saying Peter Thiel, the dollar and, the bond market are going to be the ones to keep an eye on if there is a type of a squeeze that we would expect. But that means that obviously we would see that pullback in the equity market. Right now, we're seeing some signs of life, and the VIX being one thing that would push it up. We're seeing S&P down $70 today, and then if we look at the dollar, it's still strong in this range, right? Yeah, it hasn't came down over the past few months while the price has been shooting up like crazy. It's actually been rallying for the past few weeks, so it's going to be really interesting to see how this plays out. Even bonds itself, you can see that the yields are coming down significantly. Still, at the longer end of the curve, it looks like people are locking in some of those gains. We're going to have to see the shorter end actually drop a lot faster. I would assume that would be when we start to see equities pull back. But that's where we're kind of sitting right now. If we look at just equities real quick, I fucked up. I shouldn't have sold my Apple put as early as I did. It's dropped $10 since I sold it, so that was smart of me. But again, risk off for me, guys. I'm not trying to play this market. I'm not going to go into it, but obviously Apple 24% downward sales in China. Obviously, that's going to bring the stock market down. It seems like the bad news is finally coming out, and it's actually reacting to it. Surprise! After fucking 6 months of it just being bad news, bad data, and then people just rallying regardless of it. You see that Tesla's down $8 today. It's at that 180 level. The Mag 7, a little bit in disarray today. I don't necessarily know how long this lasts. Google's actually holding up the best. Wow. I would say NVIDIA is the anomaly, but it seems like all 7 of them are red today. Obviously, that's why we're seeing the stock market red as well. If NVIDIA was green today, I'm sure that we would still somehow be up on the S&P and the NASDAQ, but they're all red today. I'll take it. Seems like the market is selling off ahead of Powell speaking, but I think a lot of this does have to come with what comes next week. Obviously, OPEX, the expiration, the corporate buyback, the blackout window begins, and so which means they won't be buying, Apple and NVIDIA. Apple won't be buying Apple, shit like that. And then big term funding program. So debt markets are the answer. Watch those like a fucking hawk, because that will give you all the answers to what's going on. And again, this is globally synchronized, so I do think that everything does go together. It's not going to be like one domino and then you're waiting for the next one to fall. I think it just is like house of cards.
Just like that.
Sure, why not?
All right. We are going to wrap it up for today on that note. Appreciate everybody for joining us. Mr. House, Randy, anyone else who popped in. If you've not yet, do us a favor. Like, subscribe, drop a comment, share us out on social media. Chris Hoddle, appreciate the kind words about yesterday's show. It was a fun one. We will be back tomorrow at our regular time, 3 Eastern, to give you the latest. Hear what Jerome Powell had to say to Congress, how that is moving the markets. I believe he starts speaking at 10 a.m. Eastern time. Let me double check that. It's usually about a 2-hour, yes, 10 a.m. Eastern time. He'll be talking to Congress. Usually goes for a couple hours. So we should have all of the notes from that for tomorrow's show. So looking forward to discussing that. Anything else happening in crypto? The markets are, they're trying to claw some of it back. That the last couple hours on that chart, not great, but we're going to get there. We're going to get there. We're going to be okay. We're not going to $9,700 like Kevin said. All right, don't listen to Captain Fear over here.
I'm trying to make everyone rich with the best opportunity that you could possibly get for Bitcoin, because obviously we're not going to see it go back to 2014 levels. But I will say this. That's a blessing if you have the opportunity to buy that at that level.
If it goes to 12K,
For me personally,
I'm buying it at 12K. If it goes to 52, I'll buy some at 52.
no, 69K like Sailor, fucking $500 million all in, whatever, how much it was.
Pop another Adderall and drop another 100 million into it. All right, that's gonna do it for today.
There's only
Love
Bitcoin.
you guys. Have an awesome day. We'll see you next time.
Take care, everyone.